Welcome to the Maxis Accounting Training Series. In this lesson, we will explain the chart of accounts in Maxis. This video is not meant to teach accounting from zero. It is made for accountants and accounting users who want to understand how the chart of accounts affects the Maxis system, the posting logic, and the accounting reports. The chart of accounts is the financial structure that Maxis uses to record all accounting transactions, such as invoices, receipt vouchers, payment vouchers, journal vouchers, and more. All accounting reports depend on this structure. In Maxis, the chart of accounts is divided into 4 levels. Level 1 is fixed by the system. Users cannot add, delete, or rename Level 1 accounts. Level 1 contains 5 main groups: assets, liabilities, revenue, expense, and accounts. The remaining levels can be structured by each company based on its own accounting policy and reporting requirements. Let us start with assets. Assets represent what the company owns, controls, or expects to collect. In the default Maxis structure, one example under assets is current assets. Under current assets, we may have cash on hand and banks. Then, under these categories, we have the actual accounts used in the system, such as cash, petty cash, or a bank account. These actual accounts are used in receipt vouchers, payment vouchers, and journal vouchers. Assets normally have a debit nature. This means that when an asset account is used on the debit side, its balance increases. For example, if we create a receipt voucher for $1,000 and select the bank account on the debit side, the bank balance increases by $1,000. On the other hand, when an asset account is used on the credit side, its balance decreases. For example, if we create a payment voucher for $500 and select the bank account on the credit side, the bank balance decreases by $500. This means the company paid money out of the bank. The same logic applies if the accountant enters the transaction manually through a journal voucher. If the bank or cash account is debited, it increases. If the bank or cash account is credited, it decreases. So in Maxis, asset accounts are not only part of the chart of accounts structure, they are the actual accounts used when the company receives or pays money. Next, we have liabilities. Liabilities represent amounts that the company owes to other parties. Examples may include VAT, income tax, unearned revenue, loans, or other obligations. In the default Maxis structure, one example is current liabilities. Under current liabilities, we may have accounts such as VAT, income tax, and unearned revenue. Liabilities normally have a credit nature. This means that when a liability account is used on the credit side, its balance increases. For example, if we issue an invoice with $1,000 revenue and $100 VAT, the VAT account is credited because it represents an amount the company must pay later to the tax authority. When the liability is paid, the liability account is debited, and the bank is credited. This reduces the liability because the amount has been paid. Credit nature balances may appear with a minus sign, depending on the report layout. This does not mean the balance is wrong. It means that the account has a credit balance. Next, we have revenue. Revenue represents the income earned by the company from selling services. In the default Maxis structure, we have inbound revenue and outbound revenue. For incoming files, the clear example is the inbound revenue account. This account is used when the company invoices an agent or customer for services provided in an incoming reservation file. Revenue normally has a credit nature. This means that when revenue is credited, it increases. For example, if we issue an invoice to an agent for $1,500, the agent is debited because the agent now owes the company money. The revenue is credited because the company earned income from the file. This is why revenue balances usually appear as credit balances in accounting reports. In Maxis, revenue is mainly affected when invoices are posted. Creating the invoice alone is not enough for accounting reports. The invoice must be posted so the accounting entry is created and reflected in the statement of account, receivables reports, and file profit and loss reports. Now let us move to expense. Expenses represent costs incurred by the company. In Maxis, it is very important to understand the difference between cost of sales and administration expenses. Cost of sales represents direct operational costs related to tourism files. For example, cost of hotels, transportation, restaurants, and other direct services. These are direct costs because they are connected to reservation files and services provided to the client. Administration expenses are different. These are company overhead expenses, such as salaries, office rent, and other office expenses. These expenses affect the company's general profit and loss, but they are usually not part of a specific reservation file cost. This separation is important in Maxis. The system needs to know which expenses are operational costs related to files and which expenses are general company expenses. That is why it is recommended to separate cost of sales and administration expenses clearly in Level 2. This helps the system produce cleaner reports. Both cost of sales and administration expenses affect the overall profit and loss. But cost of sales is also used for file-level profitability when connected correctly to the file number or cost center. For example, when a hotel booking is posted from an incoming file, the system records the hotel cost as a cost of sales. This posting usually happens from the reservation file under the Related Service tab, such as hotels. When the user clicks Post on the service record, Maxis transfers the financial transaction to accounting. This is why it is important to configure cost accounts correctly. If the cost of sales accounts are linked properly in the settings of the Incoming tab, the system can separate file costs from general office expenses. This gives more accurate file profit and loss reports. It also keeps the general ledger profit and loss clean. One important note before we continue. This relationship is also connected to system settings, where the company defines the Level 2 accounts for inbound revenue, inbound cost of sales, and administration expenses. We already explained this setting in the incoming system settings video, so here we only need to make sure that the chart of account structure matches those selected accounts correctly. Now let us move to the accounts category. This is one of the most important parts of the Maxis chart of accounts. In many traditional accounting systems, customers and agents are placed under assets because they are receivables. Hotels, restaurants, transportation companies, guides, and suppliers are placed under liabilities because they are payables. But Maxis uses a separate Level 1 category called accounts. Why? Because Maxis is not only an accounting system, it is also a tourism management system. Accounts are used across operations, reservations, and quotations too. So instead of forcing operation, reservation, and sales teams to think in terms of assets and liabilities when creating accounts, Maxis groups all business partners under one place called accounts. This makes account management easier. A user who wants to create an agent simply goes to agents. A user who wants to create a hotel simply goes to hotels. A user who wants to create a restaurant, transportation company, guide, or other supplier can create it under its operational category. But from the accounting side, Maxis still needs to know whether each account behaves as receivable or payable. This is where account type becomes important. In Level 2 under Accounts, each group has an account type. The account type determines whether the account group is receivable or payable. This also determines the normal account nature. Receivable accounts have a debit nature. Payable accounts have a credit nature. For example, agents are usually receivable accounts. This means the agent account normally represents money expected from the agent. If we issue an invoice to an agent for $1,500, the agent account is debited, The agent balance increases because the agent owes us money. Later, when the agent pays, we create a receipt voucher. This reduces the agent balance because the payment has been received. So agents and customers are usually receivable account types. They appear in accounts receivable reports. They are used in receipt vouchers, and they represent amounts expected from clients or agents. Now let us look at payable accounts. Hotels are usually payable accounts. The same applies to restaurants, transportation companies, guides, and other suppliers. If a hotel cost is posted for $700, the system creates the entry. The hotel account is credited because we now owe the supplier. Later, when we pay the hotel, we create a payment voucher. This reduces the hotel payable balance. So hotels, restaurants, transportation companies, guides, and other suppliers are usually payable account types. They appear in accounts payable reports. They are used in payment vouchers, and they represent amounts the company expects to pay. The account type affects more than just classification. It affects how the system reads the account in reports. If the account type is receivable, the account appears in receivable-related reports. If the account type is payable, the account appears in payable-related reports. This is why selecting the correct account type is critical. Before we finish, there is an important point about the default structure. The chart of accounts in Maxis comes with a default structure designed for tourism companies. However, each company can amend the structure based on its own accounting policy and reporting needs. But Level 1 is fixed. These Level 1 categories cannot be changed because they are the foundation of the accounting structure and reporting logic in Maxis. To summarize, the chart of accounts is the accounting foundation of Maxis. Assets are debit nature accounts and are increased when debited. Liabilities are credit nature accounts and are increased when credited. Revenue is credit nature and is mainly affected when invoices are posted. Expenses are debit nature and include cost of sales and administration expenses. Cost of sales should be separated from administration expenses because it affects file profitability and operational reporting. The accounts section contains business partners. The account type decides whether each account group is receivable or payable. Receivable accounts have debit nature. Payable accounts have credit nature. This setup controls how accounts appear in payables, receivables, statement of account, aging, outstanding, and allocation reports. In the next lesson, we will explain how to add accounts, toolbar options, and how to manage chart of account structure. Thank you for watching, and see you in the next video.